Russia's oil and gas revenue about to fall off the cliff? And will that affect geopolitical strategy in the war? Let's find out next on the Energy News Beat Stand Up.
Hey, Michael, Russia's oil and gas revenue may fall in November by 35%, according to Reuters calculations, or as we commonly call them, Reuters. In a significant blow to Russia's wartime economy, state revenues from oil and gas exports are projected to decline sharply in November. Rutro, according to calculations, these revenues could drop by 35%. The estimate is based on lower oil prices for tax purposes, which averaged 57.3 per barrel from January to November, down from $70 a barrel in the same period the previous year. There are some really other big factors linking in here, Michael. This revenue shortfall may be contributing to heightened diplomatic activity. As we are recording this on Sunday, Michael, Ukraine officials are supposed to be at the White House working to end the war. The activities surrounding the Russia-Ukraine war. Michael, there's also a story on EnergyNewsBeat.com that Zelensky's in a middle of a corruption scandal. If you didn't think it was any more corrupt, just buckle up. His number 2 guy was hiding millions in a dresser drawer. So, where did your tax dollars go? It went to somebody's sock drawer. Post-war oil prices, sanctions lifted, and rising demand. This is where we have to really sit back and take a look, Michael. The counter lifting of the sanctions that I think we're going to see an end of the war. You've heard me say that a few times, and I think that we will. On the flip side of the EU's price cap on Russian oil is set at $47.60 per barrel. Without the cap, Russia could then sell at market rates. What is this going to do to Russia? This is going to put more money in his pocket because running 1,500 dark fleet tankers is not cheap. So he's really using oil to fund and ship and then manage his cash flows. Think about raising that up. You're going to have all this oil now streaming through. Is it going to make a difference to OPEC plus numbers? I don't think it will. I think we're actually could see an increase to prices coming around the corner at the end of the war.
Yeah, I'm going to slightly disagree with you on oil price increase when this war eventually ends. I mean, you're right. It will eventually end. You'll be right at some point. The war won't go on infinitely. So you are right. Thank goodness we've got Jared Kushner on the scene working this out. Whew, I feel so much better now that we've got Jared Kushner negotiating with the Ukrainian delegation. Whew, we're good. We're saved, folks. That's clearly a joke. I think the key to think about with what's going to happen when this war eventually wraps up, I mean, clearly all sides are sort of motivated here from, I think the U.S., our delegation is fairly motivated to get this war ended because I think they see this as a ability to, they clearly believe, in my opinion, the opposites to of what you think, in that prices will go up. They believe oil prices will go down once this war ends because Russia will be able to begin to enter more oil into the market. Because, again, it's not that they're not exporting, it's that Ukraine has started targeting the refining capacity of Russia. You've done a great job in this article pointing out that somewhere about 17 major refineries in 2025 have been targeted, which, I mean, this is a big range, but it could be up to 38% of all the refining capacity in Russia is offline. Once the war is over, they'll be able to get that refining capacity online, further entering more supply in the market. You also, again, point out in this article that Deutsche Bank forecasts about a 2 million barrel oversupply in 2026, which is going to keep pressure on prices and probably keep them under $6. So I don't necessarily agree that the end of the war is actually going to lead to price increase. It may not tank prices as much as the Trump administration would want, but I don't think it's necessarily going to raise prices, if only because we're still in an oversupplied market. Ending the war is not going to lead to an oversupply, not going to lead to a balancing of supply. If anything, more barrels are going to be put on the market.
And I want to add to this, to the counter side of this. Russia has been shipping everything they can produce. They're maxed out on their production. When you eliminate the sanctions and eliminate the dark fleet over the long haul, it's more money to Russia, more money in his pocket. But yet the oil has already been bought off of the markets. So the market does not actually know how much is being bought. So,
Yeah, but as you have to remember, oil how is oil priced? It's priced in on the futures market on the future estimate of supply and demand. The market is always assumed to be in balance today. The market's always in balance today. It's the question of what's the future balance going to look like. And you're not going to convince me that lifting sanctions on Russia is going to tighten supply. It's going to expand it ever so slightly, or at least keep it the same.
yeah. So let's go to the next story here. Caspian Pipeline Consortium halts Black Sea oil loading after Ukraine attack and Black Sea tankers hit. There were two tankers hit, Michael, yesterday in a, do you remember when we had tankers hit in the Red Sea and all of a sudden prices went $20 a barrel more? Now it's like, oh, tankers hit. Oh, well, who cares? Unbelievable. And I also put in this story the number of different attacks in the refineries and everything else, also natural gas disruptions and the quantitative energy losses. This is just a total thing, but the Ukraine corruption scandal is actually, I think, going to come home to roost on Zelensky's desk. So I'm hopeful there. Let's go to the next story, Michael. What if Venezuela's oil is shut down and we get peace in the Ukraine? Let's take a look at what potential impact on the prices. Michael, how much oil do you think Venezuela ships right now?
Very little.
Exactly. Ding. So if we, go in and we've now over the weekend, the main query mentions shutting down Venezuela airspace. This appears to reference broader implications. Current production data paints a different picture of modest recovery among challenges. For 2024, annual production was 1,188 KB barrels per day, a 32% drop from 2010 levels, but showing signs of stabilization. Exports fluctuated, hitting a 9-month high of 900 KB barrels per day. And you sit back and take a look. 20 years suggest production could average between 800 and 892 barrels per day. Who cares? That's not that much that we need right now. I think this is more political from a standpoint of impacting the global markets.
Yeah, I mean, I could go on a long rant. I mean, why we're getting involved in Venezuela is absolutely beyond me. But that's an argument for another. Wouldn't let we're getting ready to wind down the Ukraine war. Got to spin another war up somewhere else. I mean, it's pretty unbelievable. But let's go back to the original point here about what's going. How's this going to impact oil prices? Again, very little. There's not much oil coming out of Venezuela right now. The Trump administration, both in 2016 and in 2024, gave Chevron the right to go back in and attempt to, because they have that big joint venture with PDVSA, and extract some oil. It hasn't really worked out from that standpoint of, they just dip their toe in the water. Then, geopolitical things go crazy. They dip their toe out. So nothing's really going to happen. I think this is more of a geopolitical issue. You're only looking at about, 10,000 barrels a day. It's something pretty crazy like that, or 100,000 barrels a day out of Venezuela, which is basically a 32% drop from 2020 or 2010 levels. And it had been even about 80,000 barrels 80,000 barrels a day in October, and it's slowly ramping up. It's pretty interesting. There are some buyers right now. China and the U.S. are actually the two largest importers. One of the reasons why the U.S. does import so much import so much Venezuelan crude, and why we're so apt to get back in there, is because it's heavy crude, and heavy crude is easier to refine in the refineries that are set up in the Gulf of America, down there in Galveston, down there in Houston. All those refineries are set up to process that heavier crude. So we actually do have an interest in getting oil flowing back from Venezuela. The question is it really going to impact no, it's not going to impact the markets. I just think it's absolutely insane what we're doing down there, but that's a story for another time.
Well, the reason, which we don't want to go into, but it is China. China had set up shop in Venezuela in South America, and so there is other things in play, but it's not necessary for this show. Hey, let's go to the next story. The Texas oil mogul at war with California over offshore bounty. I kind of like this story. You know, some of our biggest stories this year, and here we are in December 1st of 2025, and we need to send a Christmas turkey to the turkey in California, Gavin Newsom. He has been a gold mine for you and I this year for our stories. In the high stakes world of energy production, a bold Texas executive is squaring off against California's entrenched environmental policies in a bid to tap lucrative offshore oil reserve. James Flores, the Houston-based CEO of Sable Offshore, pushing to revive dormant oil platform off Santa Barbara coast, assets acquired from ExxonMobil that have sat idle since the pipeline spill in 2015. Michael, our great friend of the show, Mike Umbro, has pointed out that in this area, if we don't drill for oil blobs leak out and ooze, much like Jerry Nadler has a problem. It oozes up onto the beach. And so when you sit back and think, this is actually helping the environment by drilling out in this area. But California's regulatory landscape is a minefield. Much like Jerry Nadler, the state has imposed stringent environmental reviews. And I think that this is just absolutely, here's where it is a real problem, Michael. If those Sable platforms came back online, they would help save the main pipelines in California. Kern County, I'm watching this story in a side story on this one very closely because he's got 2,000 permits that are supposed to start next month. I'm wondering if his permitting department is going to slow walk those like they've done. They're down to about 13 permits this year, Michael, from thousands of permits in Kern County a year in the past, down to 13. So this is absolutely a showdown waiting to happen that we're going to be watching.
Yeah, it just goes to show our favorite governor and that administration there in California has really no idea about energy policy. They're confused and wondering why their prices are so high when even oil prices are at this point, and yet they won't even allow their own in-state resource to be extracted. And as you mentioned, the center of this dispute is that Santa Ynez unit, which is basically that kind of cluster of 3 different offshore platforms that are sitting just off the coast there that did a really decent amount of crude oil volumes before they got shuttered. Again, there was a spill, that 2015 Refugo spill. So they're just using that as an excuse to shut it down. It's pretty unbelievable. Everything has to go back with regulation. Maybe they need to bring in Zoran Mondami. I saw he's cutting regulation for bodegas in New York City to make it easier so that small businesses don't die in regulation. Maybe they need Mondami in there.
Okay, for our podcast listeners, I put my palm to my forehead and I'm about to do a Fred Sanford imitation of just pretending to have a heart attack. Michael Tanner, the young buck on the show, kills his co-host that's older than dirt with a Mondami. Let's bring in Mondami to run the regulatory process. Holy cow, Batman. That was great.
Yeah, I mean, obviously that would be a terrible idea. I find it's just, even somebody like him, a communist, understands regulation kills innovation and kills the small business. But what are they doing in California? I mean, again, Newsom is setting up for a presidential run here. So everything he's doing with energy policy is so that when he goes on a debate stage in 2028, he can stand up there and say, I stood up to big oil, while he's got 10 gallons of hair gel slicking him back that theoretically could be a lot cheaper if he lets Sable oil back on.
I would not want to clean that man's bathtub after he gets done with the shower. Hey, let's get done with this one. Let's go over here to the next story. New Fortress gets tentative okay for $3 billion Puerto Rico deal. What does this mean for investors? I'll tell you what, I kind of like the idea of this. It is a LNG to power plant, and Lord knows Puerto Rico needs it. The agreement involves a 7-year gas supply contract, GSA, with Puerto Rico's power authority, aimed at providing reliable and stable, affordable natural gas to the island's electricity grid. Yay! It's all good. However, New Fortress, a key player in LNG infrastructure, will source the gas from its facilities, including potentially Mexico LNG operations, which uses U.S. natural gas to fuel existing natural gas in Puerto Rico. Well, you take a look at the chart, and look at that chart, Michael. Holy smokes, the New Fortress is trading at about $1. And then
Ding, 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 ding.
ding, warning. I'm going to go over here to look at this, and you look at the earnings per share is now negative over on this live chart that I'm looking at over here in my system. Negative $1.52, and we're down. It's now trading. This is on a live chart about $1.52. So you got really a $2.80 swing on this live chart. In other words, run.
Yeah, I wouldn't put any of my money in here, but hey, Puerto Rico, great job. Again, what does it mean for investors? I'd still stay away, but
Yeah.
we do need to talk crude oil prices and what happened over Thanksgiving. But before we do that, guys, let's jump over and quickly pay the bills. As always, thank you for checking us out here on the world's greatest website, www.energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. We also like to thank friends of the show, Reese Energy Consulting, for helping us stay on track. We love these guys, ReeseEnergyConsulting.com. If you guys are in the upstream space and you are not working with somebody who can manage your first purchaser contracts, you're leaving money on the table. I promise you, if you're just negotiating your contracts without utilizing a third party, you're leaving money on the table. If you're a midstream company and you are not using red team analysis to help figure out how to help get permits through on your big pipelines, whether you need some design aspect, anything that you can think of when it comes to both the midstream and how that interacts with the upstream space, Reese Energy Consulting has you covered, guys. We love them over there, guys. ReeseEnergyConsulting.com. They work with clients all up and down the value chain, whether you're two people in a garage or you're a large publicly traded company. You are in their wheelhouse, guys. ReeseEnergyConsulting.com. Finally, guys, check us out. Invest in oil.energynewsbeat.com. Coming up on tax season, guys. We haven't figured out how you're going to pay your taxes. Or if you're going to pay taxes this year, highly recommend going to invest in oil.energynewsbeat.com. We show you a way not to pay taxes and potentially get some dividends in the future. What's better than not paying taxes and getting a little bit of cash flow and fighting Gavin Newsom and investing in oil and gas? There's nothing better. There's nothing better than that, folks. Invest in oil.energynewsbeat.com. Oil prices on Friday, Stu, or over this week, we recorded on Tuesday of last week. If I don't right. want to make, if I can't remember, we were up all the way above. We're almost at $60, and so this is a little bit of what happens every Thanksgiving. We usually see an absolute tumble of oil prices. Things have sort of dipped down. We currently finished at 58.88. Things look to open a little bit slimmer at about 58.48. So a little bit of softness, a lot to do with what's going on with the Ukraine peace negotiation. Again, I think that's great. We need to have peace in Ukraine. I come back to the real then question for all of this is what does that mean for oil prices? It probably means there's going to be more supply on the market and we'll continue to see a softening in prices. Natural gas prices, Stu, all the way up over $4.85. Unbelievable.
Look at that chart.
That's happened in natural gas. All you natural gas boys are doing absolutely great. And I mean, it's really unbelievable. We saw rig count shed 10 rigs in the U.S., 7 in Canada, and 25 internationally. So absolutely eviscerated any quote-unquote rig count gains that we saw. Frac count spread dropped by 6, which basically erased the last 2 weeks of gain, down to 73 frac rigs running, and there are about 544 rigs now running in the United States. So an absolute kind of reversal of what actually was a little bit of strength in the rig and frac count spread market. Other than that, guys, it's kind of all quiet on the Western front. There are some deals I think they're being sniffed around right now. I think you're going to start seeing some M&A action on the natural gas side, if only because I think it's becoming extremely frothy. You're talking about, we could see $5 natural gas. I think you could see some M&A action there. I do think, though, on the oil side, with prices being as low as it is, there will be some people looking to possibly make some deals, and the classic, buy low, sell high. So other than that, we hope everybody, one of our listeners, had a great Thanksgiving. We know we did. Stu, as always, my favorite segment of the week. What's got you worried this week?
I'm not worried about a thing. I'm starting my new classes so I can be a legitimate licensed day trader, and I'm looking forward to that. So rock and roll, baby.
Instead of the
no
Kramer
investment
rule,
advice, especially when I lose my own money. Hey, I want to give a shout out here to Dave. He sent me a note, and so not only am I going to go writing, we just had a great podcast with Tyler up there. He is with the Americans for Prosperity up in Wyoming. Go check that podcast out. The staff dropped it out yesterday, and we love our buddy there, Dave, on Substack. He follows us on the Substack, and I'm going to go ride with him one of these days. So you got to love a good horse ride.
Yeah, no, absolutely. And we will keep, we love our valued subscribers, and we appreciate everybody. Guys, check us out, Substack, YouTube. If you have not subscribed and you're listening to us, please subscribe. It really helps us out. But with that, guys, we're going to let you get out of here. Get to your week, your post-Thanksgiving week. Hopefully your inbox isn't too crazy. But if it is, guys, you can listen to us. We're a great listen while you're cleaning out your inbox, guys. But with that, we appreciate it. For Stuart Turley, I'm Michael Tanner. We'll see you guys next time.